Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, June 30th, right about 6 o'clock Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Good to be back in the saddle after a nice vacation. Appreciate the fellas kicking ass on the video content while I was out. And also Jacob, our newest employee, shout out to him, doing a great job creating shorts from our content to get the word out there about what we do at Revere. So, state of the market, we're in an uptrend since the classic O'Neill follow through days in April 22nd and 23rd kicked off a very nice rally. Check the trend gauge over here. Market leaders, green, have been acting very well, and certainly plentiful leadership during this uptrend. Short term, the major indexes all trending above the 21-day exponential moving average. Medium term, they're all also above the 50-day moving average. Long term, we're on yellow, but we added the green sub arrow here as the the Russell 2000 poked its head above the 200-day moving average today, basically closed right on it. If we get a weekly close above the 200-day, our long-term signal will go to green and we'll have the coveted four green arrows, which is what we love to see, indicating that all of the oars are rowing in the right direction. So, what happened today? A little bit of a sell off Friday into the close after Trump said he was canceling negotiations with Canada because they were implementing a digital services tax. Over the weekend, Canada said we're going to suspend our digital services tax. This is what happens when you are negotiating from the power of strength. Quite simply, we import quite a bit more from Canada than they do from us. So that added a little bit of fuel to the overnight futures, which gapped up between a third and a half of a percent. Traded in a tight range most of the day to wrap up the first half of the year in the second quarter, a little bit of a spike into the close. Here are the numbers. So, as I said, Q2 closes with the S&P and the Nasdaq 100 at all-time highs. The 20 over 21 list, we've got three new entries on there, up an average of 1.61%, 14 up, 6 down, 1 neutral. Turbo 12 carrying over the same 12 from last week, up an average of 4.93%, 11 up, 1 down. Big 7 down slightly. RG8 up 0.61%. RG8 is our 8 growth ETF composite. S&P 500 after opening up a third of a percent, trading tight, um, closed up a half of a percent. Again, all-time highs, equal weight, right about that same area, up a half of a percent. NASDAQ 100 up 0.65, equal weight, slightly better. Dow up 6/10, mid caps flat. Russell 2000 up 0.12. Global diversified 60/40 stock and bond up 0.36%. Our flagship GROTECTION portfolio increasing its lead over the S&P year to date, up 1.18%. Turbo, nice day, also up 1.69%. Reminder, we would really appreciate it if you would like, share, and subscribe to our content, especially on YouTube. Get the word out there about how you do not have to be a slave to what's going on in the market. You can time the market using very simple trend following rules. It's simple, but it's not easy. We talk about it every night on these videos. Let's go to the charts. Here's the S&P 500. You can see since the bounce last Monday off of the 21-day moving average, a 6-day melt up to all-time highs. Tomorrow we're going to get a golden cross. We already got it on the weekly. The 10-week has crossed through the 40-week, but on the daily we're going to get the 50-day moving average crossing up through the 200-day moving average. So that will put all of our moving averages in the preferred uh, stack, if you will. That's the shortest term 8 EMA above the 21 EMA, above the 50-day simple, and then above the 200-day simple. And we were talking about 10 steps from bear to bull. That was the last step that hadn't been checked off, but it will be checked off tomorrow as this moving average will cross over and above. The 200 day. Let's take a look at the equal weight RSP. Undercut some key moving averages last week on Monday, but also rallying off that level, melting up. Note relative weakness continues, has not made an all-time high, and that's because of the leadership of the NASDAQ 100 also melting up to all-time highs after bouncing off the 21-day moving average last Monday. Good stuff there. Let's look at equal weight NASDAQ 100. That's also hitting all-time highs after undercutting and reclaiming the 21-day moving average last Monday. On to the Dow, the last of the big cap indexes. Nice melt up off the 42,000 level up to 44,000 over the last 6 days as well. Mid cap 400. Three closes now above the 200-day moving average. You gotta love that. We're gonna have the 8 cross up through the 200 either tomorrow or the next day, and the 21 is pointing in the right direction, as is the 50. Just needs some time, and this gives you some indication of small and mid caps really catch fire that this market can go much higher. And here's the Russell 2000 closing for the second straight day, basically right on, actually the third straight day looks like, plus or minus 1/10%. We consider it neutral, but basically right on the 200-day moving average. And that has quite a bit of a way to go, the all-time highs as well. That's the six major indexes. Let's go to some inter-asset correlation. The VIX first. VIX was actually up on the day, but closing near the lows, but it's trending below that the long-term average, which is 19 and a half, and below all the key moving averages, which is what you want to see, direct opposite of what we're seeing in the market, and volatility dropping. S&P 500 broke the 1% level on its 21-day ATR percent, and that syncs right up with what we're seeing on continued contraction on the VIX. Let's go to the US dollar next. This continues to just drip lower, down 0.5% today. How did that impact precious metals? We got a bounce after a breakdown last week below the key moving averages. Gold bouncing 1.2%, but it's below the 8, the 21, and the 50. We're discussing a possibility of a short if we fail at this level. And especially with the weakness in the dollar. If that shows any strength, that's typically a headwind to precious metals. A bounce up into that level of the three moving averages and a failure would be a good risk to reward on a short for gold. GDX here into the declining 8, closing slightly above the 21, bouncing off the 50-day moving average. So acting relative to the moving averages are acting a little bit better than gold is. We'll take a quick look at silver as that's acting very well above the 21-day moving average into the declining 8, however. Bitcoin, which has been in a bit of a tight range with a shakeout last week off the 50-day moving average, 4 tight closes on IBIT. That's our preferred Bitcoin ETF. Let's go to bonds now. BND up. You can see bond prices trending higher. That's good. That means bond yields trending lower. Same thing with TLT. So we'll take a look at yields now. TYX making a 4-week low on yields. TNX, same situation. All right, let's go to the tail of the tape. Take a quick look at the stochastics for the indexes, all positive, but headed toward overbought. RG8, 6 up to neutral. NASI, that's the McClellan Summation Index that gave a sell signal last week, but has hooked back up and is approaching overbought. That's bullish. Dollar continues to be weak. Yields dropping. Percent of stocks above the 5-day at a 78. Not too high, not high enough for us to be concerned anyway. Although, again, 6 days up. The expectation is that a bit of sideways or pullback action would happen. But we are in the one of the most bullish 2-week periods of the entire year. And I think July 1st might actually be the most bullish day of the year. Again, that's a secondary indicator. We go by what actually is happening, but it's coinciding with that statistic. Fear and greed at a 67. Mentioned the digital services tax news. He's coming into today, S&P 8-day underneath all-time highs, above made a new all-time high. Same thing with the NASDAQ 100. Russell 2000 closing basically right on the 200-day moving average. Up 5 out of 6 days is our day count. 6 days above the ADMA, 46 above the 21-day exponential moving average. We have highlighted in green average true range over the last 21 days of the S&P 500 below a 1 is a beautiful thing for a bull to see. Sectors on the strong side today, software, banks, XLC and K, that's communication services and tech, gold and gold stocks. To the downside, semiconductors, oils, and retail. Portfolio changes, GROTECTION. Hood got 4 ATR extended from the 21-day moving average. We trimmed some of that. They had a presentation today. Normally, these presentations, I'm not going to say normally, often the stock gets bid up into the presentation and it's a sell the news thing. Soon as the presentation started today, the stock immediately sold off, but it ticked higher and closed near the highs of the day. The more they went on the presentation, the more bullish the action. Good stuff for Hood there. Also, after hours, or not after hours, late in the day, some news from Apple that they're considering replacing Siri with Anthropic or Perplexity AI or OpenAI uh, AI model. That tells the world that they're struggling with AI, but it also, and we're going to look at the chart here in a little bit, sentiment around Apple has been not bullish in any way, shape, or form. It's been a laggard under the 200-day moving average. We did something we don't normally do today, though. Took a starter in Apple on this catalyst. And this is not only the technical pattern forming below the 200-day moving average, but also a sentiment. And they've been getting a lot of flack because they're just not doing anything new, haven't come out with anything innovative in quite a while. A move away from Siri toward another AI engine for chat or gathering of data or querying would be possibly seen as a step in right direction for Apple. Anyway, good risk reward here on a power of three move around the moving averages. We'll take a look at that chart in a minute. I mentioned the offensive selling on Hood. So that puts GROTECTION at a 1.33 volatility adjusted beta, 6.37% to the downside. TurboTection added to Coin and NBIS, started a position in Reddit, sold out of AIRO, 1.69 adjusted beta, 6.8% balance at risk. Bottom line on the day, second quarter, the first half of the year, closed with the S&P and the NASDAQ 100 at an all-time high, but we are at day 6 melt up off the 21 expectation tempered. We're always positive on our short-term expectations as long as we're above the S&P 500, the 21-day on the S&P and the NASDAQ, but after 6 days up, um, a possibility of some cool off. On the other hand, like I said, we are at an extremely bullish, historically bullish part of the calendar. Keys going into tomorrow is going to be the 8-day exponential moving average underneath the all-time highs to the top for S&P and the NASDAQ, for the Russell, 8 and the 200-day moving average, three tight closes around there. We'll see what the first day of the second half of the year brings tomorrow. But first, let's take a look at Apple and this chart here. I'm going to draw a couple lines. Let's go to the weekly chart first. And there's been a downtrend line here with Apple, an uptrend line here, very clear break above it today. No question about that. Let's go to the daily chart. Relative strength has been terrible for this. It's expensive if you look at a peg basis. 8% sales growth in fiscal 2026 against a 28 PE, but volume really kicked in today. after this announcement about Siri, and it broke above this little 2 week shelf that it was forming. If you take it back a little bit further, it's a 4 week breakout, 3.5, 4 week breakout. Now, I know it's under the 200-day moving average, and we don't usually buy that, but this is kind of a contrarian play with how terrible Apple has been on a relative basis. So, actually, if you look at the weekly chart here, it shows that fund ownership has dropped for 3 consecutive quarters. So that's people selling out of Apple. Like I said, can't really get much worse on the sentiment on this. Breakout above the shelf. You got 8, 21, and 50-day moving averages all stacked up there. The stop would be below today's low. We would expect it to hold if it doesn't. That's a very tight 4+ percent loss. Very manageable. So the risk reward is there, and then we'll see what happens should it get up into the declining 200-day moving average. So a little bit of a different spin there on what we usually do, but all things considered, the risk reward is there. So that's the Apple buy. Let's go through. First of all, we'll go through the Turbo 12, same 12 as last week. These are sorted in percent change for today. QUBT up nicely, as well as MP materials into the declining ADMA. This is something we see a lot, and it's something to keep an eye on. When a stock has been trending above the 8 and it breaks it, and it bounces or holds at the 21 and rallies back up, important to watch what happens when it goes into the declining 8-day moving average, because what's forming here is a bit of a triangle. 21-day exponential support below it, declining 8 EMA resistance above it, which is working. See which way it breaks out of this triangle. LEU bouncing off the 21-day moving average. And note how this failed at the ADMA on Friday, got above it today. That's a good sign there. SEZL continues to just rocket. Dave, same thing. Guardant Health, break out of a nice cup and handle inside day today. KTOS continues to work very well. AAOI, very nice little height flag here, 3-day flag after a nice move up and clearing the 200-day moving average. Big estimates for fiscal year 2026, and in fiber optic group clearly needed for data center build out. INOD continues to show relative strength. Oddity inside day today. Lemonade in a little bit of a 1+ week consolidation. And don't get unhinged by Hinge, but it cleared the 50 level today. And a nice flat base breakout continuing to go higher. Don't know a whole lot about this. I do know that of these 12, only 2 are thick enough to be considered for GROTECTION, and that's why we have TurboTection. And that's because actually 3, I guess, would be considered LEU, MP, and Qubit. We're looking at the 50-day average daily dollar volume. Generally anything under 200, we stay away from. But if it's in the high 180s and ascending, we would consider it for GROTECTION. But that's why we have TurboTection to pick up these relative strength stocks with under $200 million in daily dollar volume. All right, let's go to the 21 over 21 for this week now, sorted by what we own. Palantir, big shake on Friday after Russell rebalancing, regained the 21-day today. GEV inside day higher. There's Hood. It's extended. It's up another 2% after hours. So the right now, that's 4 ATR above the 21-day moving average. Very extended. Spotify bounced at the 8. Nvidia tight action. NBIS making new highs off the 21-day moving average. Here's the rest. CoreWeave consolidating. Zscaler undercut and reclaim of the 8. Got a downgrade today, but basically shook it off. Light continuing to trickle its way higher. CRDO, nice little flag it's putting in. Viva, not doing a whole lot, but coming off of the 8 EMA. DoorDash continues to make new highs. Axon, new highs. Net new highs. EQT consolidating above the 21. Vistra inside day today. TWR undercut and reclaim of the 8. Coin, we added this last week, 2-day pullback after a nice move up. Here's the three new ones. Shack, this looks really good, consolidating at the top of this flat base. Uber, coming back near the top of this flat base. Picked up some strength last week after announcing a partnership with Waymo for self-driving taxis in Atlanta, and CCJ, the last one added. It's taken a big move up over these last 5 weeks, above the 8 EMA, but look at the earnings growth going forward, and certainly very critical to nuclear, and the administration is stressing nuclear. So that's going to wrap it. As always, like to hear from the emails, Don at revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. Our flagship portfolio, GROTECTION, and its more aggressive cousin, TurboTection, designed to grow assets during uptrends, protect them during downtrends. Common sense approach to investing, just like a common sense approach to life. When things are going bad, you take steps to fix it. Things are going well, you ride the wave, and that's what we're doing right now, is riding the wave. And with that, I'll end it for Monday, June 30th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.